Hi, I'm Kevin Bailey, and I'm the chairman of Po Valley Energy. We're an ASX-listed emerging natural gas producer focused on the attractive European energy market. European gas market in the last 12 months has witnessed supply shortfalls and record high prices, with European gas prices reaching the equivalent of $420 per barrel oil equivalent back in August. The company has majority ownership and control as operator of a material portfolio of development-ready natural gas fields, ideally positioned in northern Italy. Italy is Europe's third largest market for natural gas and has a favourable tax and concessionary system for domestic production. Italy, in recent years, imported over 90% of its gas requirements, and in the face of rising prices and reduced Russian supply, the government and the regulators are becoming more supportive of gas exploration and development activities. Po Valley's two main assets are the onshore Selva Malvezzi concession, where PVE owns 63% and is the operator, and the Teodorico shallow water gas field, where we have 100% ownership and are the operator. This one's located just offshore in the Adriatic Sea. Po Valley has over 20 years of exploration and production history in Italy, and a revitalised, aligned and highly credentialed management team, having prior experience in bringing Italian gas developments into production. Po Valley Energy is now fully funded for first gas production from Podimare 1, expected to commence in the beginning of the second quarter of next year. The gas plant and connecting pipeline construction contracts have been signed post the recent successful $4.5 million capital raise in early August. Now, Podimare 1's capital cost is estimated to be about $2.7 million Australian dollars net to Po Valley Energy. Upon successful first production, additional step-out wells at Selva North and South have potential to significantly boost production and cash flow from the Selva Malvezzi concession. Total concessional net reserves and resources have been independently estimated at about 72.8 net BCF. Check the Competent Persons Report dated the 25th of July on our website or the ASX website for more information on that. Additional transformational upside potential exists from the shallow water Teodorico field, which has 37 BCF net of 2P reserves ready for development pending our final production concession approvals. I'd like to leave you with three key takeaways about Po Valley Energy. Firstly, this is a revitalised, aligned and highly credentialed board and management team. Our Australian-based board, who have over 25% of purchased shareholding, is combined with a local Italian management team with decades of experience exploring and operating in the Italian oil and gas sector. Our exploration new ventures manager worked for 31 years at Eni, which is Italy's largest oil and gas company. This included time as their Northern Italy exploration manager. He knows the area and he knows the assets well. Our senior geophysicist and senior geologist have over 18 years and 25 years experience, respectively, in the oil and gas sector in Italy. Secondly, with a pure European focus, we are in the midst of an incredibly strong macro environment for us, with prices likely to remain elevated for the long term. It would seem that the European gas energy markets are now facing a structural rather than a short-term cyclical deficit. The immediate impact of this has been an unprecedented increase in European energy prices. A secondary positive impact for us is that this energy crisis is a more supportive governmental and regulatory environment for European domestic gas exploration and production. Thirdly, Po Valley Energy is fortunate that we have established an asset position that can capture the upside from the current market strength. And with development-ready assets and a resource base that provides material blue sky optionality. In the Selva Malvezzi concession, the Pot de Mer 1 well, with net 2P reserves of 8.3 BCF net to Po Valley, has received final development approvals. This well is located in a proven and repeatable gas play, and there exist follow-up tie-back opportunities targeting a further initial 8.9 BCF 2C resource. Offshore, our Puerto Rico asset is potentially even a larger resource. It has also development ready, pending final production concession approvals with 2P reserves of 37 BCF and a 2C resource of an additional 10.6 BCF. Po Valley also holds other licenses in this exciting region and has an active new ventures program. Cash flow from Po de Mer 1 will place Po Valley Energy in a very strong position to capture these opportunities as they materialise. Finally, on the back of these strong tailwinds, the next 12 months should be an incredibly busy and exciting period for Po Valley Energy. Po de Mer 1 construction has commenced, transitioning Po Valley to a domestic Italian gas producer in the first half of next year, with active gas sales negotiations well underway at the moment. To back this up, we are planning G&G studies on the follow-up tie-back opportunities in the Selva Malvezzi concession at Selva North, Selva South, and Selva East. We hope to create value from our Puerto Rico asset realisation program, as we have an active new ventures program led by the former head of exploration for Eni in Northern Italy to take further advantage of this current market opportunity for gas in Europe. This is an exciting time for Po Valley Energy, and if you require any further information, please do reach out and contact us. Thanks for listening.